Ladies and gentlemen, good day and welcome to the Q1 FY26 earnings conference call of Marathon Nextgen Realty Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kanav Khanna from EY IR. Thank you, and over to you, sir.
Thanks. Good noon to all the participants on the call, and thank you for joining in the Q1 FY26 earnings call of Marathon Nextgen Realty Limited. Please note that we have mailed out the results to everyone, and you can also see this on our website, and it's also been uploaded on the stock exchanges. In case you have not received the same, you can write to us. We'll be happy to send it over. Now, before we proceed to the call, let me remind you that the discussions may contain some forward-looking statements and may involve known and unknown risks, uncertainties, and factors. It must be viewed in conjunction with our business that could cause the future result, performance, or its achievement to differ significantly from what we have expressed or implied. To take us through the results of this quarter and answer to all of our questions, we have the management of Marathon Nextgen, represented by Mr. Chetan Shah, Chairman and Managing Director, Mr. Mayur Shah, Vice Chairman, Mr. Kaivalya Shah, Director, and Mr. Samyak Shah, Director. We will be starting the call with a brief overview of the quarter gone past, and then we will follow it up with some question and answers. And with this being said, I'll transfer the call to the management. Over to you, sir.
Thank you, Kanav. Good afternoon, everyone. Thank you for joining us for Marathon Nextgen Realty's Q1 FY26 earnings call. I am pleased to report that we have begun FY26 on a strong note, delivering robust performance across all key operational and financial metrics. This quarter's results demonstrate the strength of our business model and strategic positioning in Mumbai's dynamic real estate market. Starting with our operational performance, area sold is 7% more as year-over-year growth. Pre-sales value jumped 16% to 183 crore. Collections have surged 28% to 239 crore. These numbers demonstrate the continued market demand for our project and underscore our consistent execution capabilities and the trust our customers place in Marathon brand. Friends, the momentum we are experiencing is directly linked to the broader industry dynamics. The Indian real estate sector, particularly in the Mumbai metropolitan region where we operate, continues to benefit from favorable demographics, ongoing urbanization, and improved infrastructure connectivity. Our strategic focus on high-growth corridors like Baikala, Bhandup, Dombivli, and Panvel has positioned us perfectly to capitalize on these trends. Friends, this strategic positioning is paying off across our project portfolio. Our market developments, Marathon FutureX at Lower Parel, Neo Homes at Bhandup, Nextzone at Panvel are all experiencing positive market response and stable growth. This quarter, we received occupation certificates for 3 towers at Nextzone Panvel, which not only accelerates our revenue recognition but also demonstrates our execution capabilities in a competitive market. 3 key micro markets have seen leadership in the market. Monte South in Baikala ranks among top 3 projects in both supply and sales volume. Marathon Nextzone Panvel holds a similar top 3 position in Panvel, while Neo Homes in Bhandup is also among the top 3 by market supply. These rankings across different price segments and locations showcase the breadth of our market appeal. Friends, beyond residential, Our commercial portfolio in Lower Parel and Mulund. The Lower Parel, we have Marathon Future X, and Mulund, we have Marathon Millennium. Continues to attract strong interest from both end users and investors, adding another dimension to our revenue stream. The strategic highlight of this quarter was our successful QIP fundraising of rupees 900 crore, rupees 9,000 million. QIP closed on June 30th, that is the last day of the quarter. The overwhelming response from the leading domestic and foreign institutional investors, including marquee names like Quant Mutual Fund, Kotak Alternate Asset Managers, reflects the market's confidence in our growth trajectory. We have been strategic about deploying these funds. Repayment of debt of about 340 crore in July and interest saving of rupees 10 crore quarterly and rupees 40 crore annually will result from this repayment. Debt to equity ratio, which was already very low before QIP, is now at absolutely zero level, with debt reduction in numerator and equity augmentation in denominator. Net debt is zero, with a sizable liquid balance available with us. Rupees 300 crore out of the QIP funds are earmarked for land development and project acquisition to build our future pipeline. Let me invite you to suggest good projects in Mumbai. Our focus is going to be redevelopment in South Mumbai. Additionally, 160 crore are earmarked for fast-pacing our ongoing projects. Friends, complementing this is our parent company's asset merger, which is progressing through regulatory approvals. This will bring valuable land assets and premium projects into the company, creating a simpler, more efficient structure that enhances our competitive positioning. These strategic initiatives are reflected in our financial performance for the quarter. Total income grew by 10% year-on-year to 191 crore, while EBITDA expanded to 27%, an amount of 81 crore. Most notably, the profit after tax surged 63% year-on-year to 62 crores, significantly outpacing industry's growth and reflecting our focus on high-margin projects. Looking ahead, our execution capability, together with infusion of funds, gives us a faster momentum in completing ongoing projects ahead of the schedule. Our diverse portfolio, from luxury projects like Monte South in Baikala to affordable neo homes to commercial tower Future X, positions us well across market segments. Combined with our strengthened balance sheet and robust land pipelines, we are well equipped to capitalize on the positive industry outlook. The fundamentals supporting real estate remain very strong. Steady GDP growth, continued urbanization, and supportive government policies. Our strategic focus on premium locations, operational excellence, and financial discipline positions Marathon Nextgen to continue outperforming industry benchmarks while delivering sustainable value to all stakeholders. In conclusion, Quarter 1 has established a solid foundation for financial year 26. With accelerated execution, stronger financials, and enhanced market positioning, we are confident that this will be a better year of strong performance and sustainable growth for Marathon Nextgen. Friends, I will now open the floor for your questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jay Chauhan from Trineta Asset Managers. Please go ahead.
Hello. Good morning, and thank you for the opportunity. Am I audible?
Yes, you are.
Yes, sir. So my question is regarding your marquee project, Monte South. As of last update, Tower B was approximately 65% complete, and Tower C was at 16%, right? So, could you just provide current completion status of both towers? And additionally, considering its premium nature, has there been any revisions on the estimated project costs, and what is the sales velocity that you are currently witnessing for the unsold inventory?
So, Monte South is progressing very well. Tower B is almost at now 62nd floor. So, like from RCC angle, it is almost like 90% complete. And we are about to, we have already applied for part occupancy for the Tower B up to 35 floors. So, Tower B is progressing very well as per the plan. Tower C is also progressing very well. It has now reached on 12th floor level, and it is progressing very fast. Almost slab to slab cycle we have been achieving is every floor to floor is around 10 to 12 days. So that is also progressing very well.
Got it, sir. And any revisions to the estimated project costs and also about the sales velocity that you are currently witnessing for the unsold inventory? Yeah.
There is no change in the estimated cost, and the cost remains same. On the velocity part, like particularly during monsoon period, typically the site visits are normally less, but otherwise we've been reporting every month around 5 to 6 bookings. That is a good velocity for the high value project.
Got it, sir. Got it. That's it from my side, sir. Thank you.
Thank you. The next question is from the line of Kusha from B&K Securities. Please go ahead.
Yeah, hi, sir. Thanks for the opportunity. Am I audible?
Yes.
Yeah. So I just had a couple of questions regarding what would be the launch pipeline if going ahead for at least the next year or two?
Yeah. So the Marathon, basically, you may be knowing that Mumbai market was facing a huge challenge on the environmental clearances. And fortunately, as on last week, the Supreme Court has given the, a good judgment whereby the environmental clearances in Mumbai will start very soon. Looking at, that in mind, we have Monte South commercial, which we would like to launch in next 2 quarters. That is approximately 8 lakh square feet carpet and GDV of around 3,500 crores. Recently, we've been looking at, commercial supply in the South Bombay area, particularly, and even BKC. The vacancy rates have really gone down, and there is a good demand for commercial office as well as retail. So this building has been designed to look at ground and one as a retail and upper floor as offices. And so, that is one launch which we are looking at in next 2 quarters. Secondly, at next zone, we are looking at phase 3 being launched, approximately 4 lakh square feet and GDV of 500 crores. So in a continuity, there's a good sales in Marathon Nextgen Panvel. The airport coming up, the ceiling is also connecting to South Mumbai in almost 40-45 minutes. So there is a good demand in Marathon Nextgen Panvel project. So we are going to capitalize on that demand. And thirdly, we are looking at our micro market neo homes, that is Bhandu. We will be launching 2 more projects accounting for approximately 3 lakh square feet and GDV of approximately 500 crores. So in next 2 to 3 quarters, Marathon is looking at almost 15 lakh square feet of launch and 4,500 crores of GDV. In addition to that, as Chairman already mentioned, we have earmarked
approximately 300 crore for new land acquisition, new project. Our model will be asset light model, JD, JV, and targeting to Central Mumbai and South Mumbai cluster redevelopment project. So we already identifying those projects, and appropriate time we will announce those tie-ups.
Understood, sir. Thanks for the detailed clarification. My next question would be, what would be the launch, or if you could give some more insights on the launch of the land at Panvel?
So,
Any
the
developments on
launch...
that? Yeah.
Sorry, can you repeat the question, please?
Yeah, any development on that Panvel land, the launch?
Phase 3. So the phase 3 will be launching in next 2 quarters. Like Mayurbhai mentioned, it's a 500 crore GDV, and it's around 3 lakh square feet. That being said, there is additional land coming in through the merger. The merger will take around 12 to 15 months, and post that we'll be launching additional project in Panvel.
Understood, sir. And the land which would be coming through the merger, anything on that?
Yeah, that's the land. So all in all, we have around 418 acres that we are getting in through the merger, where 130 acres is in Bhandup, 83 acres is in Dombivli, and 205 acres is in Panvel. So these are some of the land assets that the group company had, which will come in through the merger. And all in all, 4.2 crore square feet is what will be the area, the carpet area that can come through with this land. So this is subject to the approval from the authority. But that being said, we are working hard on getting that done in 12 to 15 months.
Sure, sir. That sounds really massive. Thanks for the opportunity. And I just had one last question. What would be the potential FSI expectation going forward?
In the company that's getting merged?
Yes.
Yes. So I mentioned around 4.2 crore square feet is the carpet area that will be coming in from the 418 acres of land.
Understood, sir. All right. All right. Thanks, sir, for the detailed clarification. I'll fall back in the time.
Absolutely.
Thank you. Before we take the next question, we would like to remind participants you may press star and 1 to ask a question. The next question is from the line of Nitesh Goel from Growth 360 Degree. Please go ahead.
Hello. Good morning, sir. Congratulations for good set of numbers. I just want to know that you are quoting that next 2 to 3 quarters, the GDV would be 4,500 crores. And sir, what would be the completion date out of this GDV? Let's say the revenue for, let's say, 29, 30 or something like that.
So these are all projects will be launched, and typically these are large projects and completing in at least 3 to 5 years period. However, we tend to take part occupancies of towers, and so the recognition can come in 2.5 to 3 years. Start coming in.
Okay, sir. Okay. Thank you so much.
Perfect.
Thank you. The next question is from the line of Meet Desai from Desai Investments. Please go ahead.
Thank you. So my question was regarding the merger. So I just wanted to understand what assets will continue to be held by promoter entity, and are there any assets which are still pending to transfer to the listed company?
Yeah. So currently the company, the holdco, is called Marathon Realty. Marathon Realty has an asset which is, FutureX, which is also coming in the merger along with 418 acres. And there are a few live projects in Lower Parel that is also coming in through the merger. So the merger pretty much, it is getting in almost all the land bank that is part of the company, and typically all these land banks are vetted legally, and hence it is getting brought in. So yes, we are bringing in pretty much everything within the merger.
Okay. So we can definitely assume that post-merger, the entire Marathon Group operations will effectively be housed under this listed entity.
No, there are other assets which are outside, which are litigated, which we have not brought in. So there would be assets outside the listco belonging to the holdco. But all the development that will happen in future is going to be in the listed company.
Got it, sir. So I had one more follow-up, one more question on the balance sheet front, sir. So post the proceedings of QIP, so just wanted to understand, the capital allocation and the impact of this on our credit ratings or, will reduce the debt, the finance cost will reduce. So I just wanted to understand your thought process regarding this.
Yeah. So there is definitely a strengthening of balance sheet. As I mentioned in my speech, debt to equity ratio, which is a ratio of two different, denominator and numerator. Denominator has grown by 900 crore of capital infusion, and the numerator, the 340 crore debt has already gone away. So currently we are sitting on a sizable bank balance. So instead of debt, it is a sort of a negative debt or, cash in the bank kind of a situation. With this, we have already approached all our credit rating, existing credit rating agencies and new agencies to re-rate the company, and that process is on.
Okay. And so lastly, I just wanted to, on the macro front, I just wanted to ask you one question is that now as we see particularly in Mumbai, so the suburbs are also, have started getting good realizations in terms of the area. And the projects into luxury, so luxury projects are also in demand. So is there any plan that you would, like to launch in the suburb part of the Mumbai?
So we have always had a policy of distributing all our projects across three segments. One is, like you mentioned, luxury or South Mumbai projects, where we already have Monte South going on, and we are actively seeking new projects in that area because our Marathon Future X, the commercial tower, has been completed. So there is, in a way, a vacuum from the city side, that is South Mumbai. Then we already have projects in suburbs, which is the Bhandup and Mulund area. So in Bhandup, we have, like Mayur mentioned, we are going to be launching 3 projects worth about 3 lakh square feet. That is a suburban project. And the third segment is, periphery, that is Mumbai metropolitan region, outside the city and suburbs, the peripheral area of Panvel. And there again, we are going to be launching phase 3 of Nextgen. So this is how we have been managing, at times one market goes very strong, the other market is not giving so much of sales, but overall our numbers keep on ticking.
Sure. So lastly, on the realization front, sir, you think that the current realizations will be sustainable? How is the demand scenario which we are looking on the ground level, sir?
The demand scenario is good, like I mentioned again in my speech, the 3 micro markets that we are active in, all 3 micro markets, we are at top 3 rank in terms of sales and supply. So that is how it is. Yes, markets do go through ups and downs, but currently the way the demand is being seen is excellent, healthy demand in all these 3 micro markets.
And that being said, Marathon always acquires projects at a price which is, actually lower than the market. Hence, we have a higher margin. Hence, we can survive in any kind of conditions.
Got it. Thank you for answering my questions. All the best, sir.
Thank you. Before we take the next question, a reminder to participants, if you wish to ask a question, you may press star and 1 on your touchtone phone. The next question is from the line of Parshva Veer from Gorilla PMS. Please go ahead.
Hi, am I audible?
Yes, you are.
Okay. Just a small, quick summary. I think we have some 420 acres, right? As on date, including the amalgamated entities.
Yeah. When it gets merged with the ListCo, the listed company will have that.
So that would be approximate. What would be the valuation for that acre? 420 acres, approximate, like 4, 5, 6,000 crores. Any idea? Any
So the
ballpark?
net value of the whole incoming asset is around 3,100 crores, the net value of that. So in that, again, 418 specifically is coming in, and around 2.33 lakh square feet carpet in Lower Parel in a project called Future X is coming in. Another 54,000 square feet in a project called Marathon Chambers right beside Future X in Lower Parel will be coming in. And 2 live projects in Lower Parel. So these are the assets that are coming in / projects that are coming in, and that everything is brought in that net value of net discounted value of around 3,100 crores.
So from this 3,100 crores, how much is realizable in the coming 3 years?
So, I mean, we are actually going through the merger process, and post the merger process, which is at 12 to 15 months, we're going to, launch a few projects there. That being said, we have a live project which is OC ready, around 2.33 lakh square feet in Future X, which we are selling simultaneously. So that value itself, at a current rate of, let's say 45,000, will be more than 1,000 crores. That is a ready asset that is coming in, and that, assuming the merger goes through, will be realized as and when it's sold, once post the merger.
And as you would have seen in our past presentation also, there are upcoming projects which are already ongoing for next 2-3 years. They will give substantial turnover.
Yeah.
And I heard before you were saying some 4 crores square feet is the sellable this thing which is available with us post the merger is done. So how would you term that in the realizable amount in rupees? 4 crores square feet into how many rupees? If you can just give me an idea.
That is really difficult to say, because very future-looking statement. Yeah, the company has the bandwidth, and this is not something that company needs to do by itself. We will be entering into some sort of a joint venture, joint development, or a DM model for some of this land. So monetizing the land would be quicker, would be the main focus post the merger of these assets.
So, I mean, if I want to just bring a ballpark figure for this 4 crore square feet as a realizable value over a period of 3 to 5 years that can be sellable, so what would that number come to?
This is future-looking statement that we will be able to share all these numbers post the merger has happened.
All right, sir. Thank you.
Thank you. A reminder to participants, if you wish to ask a question, you may press star and 1 on your touchtone phone. The next question is from the line of Sachin, an individual investor. Please go ahead.
Thank you. Thank you for giving me the opportunity to ask a question. Sir, I would like to ask that what is our unsold inventory, I mean the ready inventory which is unsold, and since you're saying that the project has completed on Future X, how much time we will take to, sell off this project, and how this will reflect in the PAT?
So, unsold ready, OC ready inventory, we have around 1.1 lakh square feet in Monte South in Tower A. around 1 lakh square feet in next zone, which is in Panvel, and around 42,000 square feet in the Lisco for Future X. And all in all, the value of that would be around around 600 crores. 6 to 700 crores.
700 crores. And how this will reflect in the PAT?
The whole timeline of the sales of this project, there will be 1 year. Yeah, 1.5. 1 year will be a good time where we'll be selling it. And off of that, around 30% will be the EBITDA and 20% will be the PAT.
So all in all, we can count it as 1,300 crores, right?
So 700 crores
on the PAT level.
So 700 crores, but the Marathon share is going to be around 450 crores, and off of that 20%, which would be around 90 odd crores.
Okay. So 450 crores, right?
Yeah.
Okay, and this can be realized within a year?
Yes.
Okay. Thank you. Thank you, sir.
Yes.
Thank you. Participants, if you wish to ask a question, please press star and 1 on your touchtone phone. The next question is from the line of Prashant, an individual investor. Please go ahead.
Hi, good afternoon. Am I audible?
Yes, you are.
Yeah, my question is, you mentioned going asset light and DM models earlier, and you also mentioned that you could look at it at your existing land parcels. Would we also be looking at acquiring projects on a DM model as well? Considering...
Yeah.
Go ahead, please.
Yeah. We are open to DM model. As you are aware, Marathon has capabilities of real estate from A to Z. 880 people are working for the group, and we have architectural capability, designing capability, marketing and sales capability, execution, that is construction. The Monte South project that you see, 65-story towers are being constructed or built in-house. So there is an EPC capability also in-house. So we have all the capabilities, and we are okay to have a DM model assignment in South Mumbai and other areas.
And what typically would you look at in a DM model? Would you look at a minimum top line or minimum sort of share to take?
We normally would want, if it is in city of Mumbai, we would look at the land area of at least 1 acre and more. So that would be the cutoff size, yeah. Then depending on the road width and other things, the FSI could be a little less or more.
Of course. Thank you. That's it for me.
Thank you. Before we take the next question, we would like to remind participants you may press star and 1 to ask a question. The next question is from the line of Jignesh, an individual investor. Please go ahead.
Yeah, thanks for the opportunity. So wanted to understand how much would be the cluster redevelopment as a size of your projects or portfolio in next 2 to 3 years, because this I think is a new kind of initiative which Marathon was not doing in the past.
Yeah, so we were actually doing it, but we were doing it for the slum rehabilitation in Bhandup.
Okay.
Now we are actively seeking projects in South Mumbai in cluster redevelopment, and that's why I mentioned that it should be at least 1 acre and more, and the size should be 500 crore of GDV at least. So from that perspective, we are looking at a cluster. Now there is going to be some cluster projects also announced in Bhandup out of the slum project. So that will come in next 2-3 quarters.
Okay. So going ahead, out of your total projects, maybe 10 to 20% would be from this kind of initiative?
Yeah. We are planning that. Let's hope what we get. But if we are also getting open land, we can. We are not insisting on cluster. Of course, cluster is the flavor of the time today, so we would prefer cluster. But we are open to other kind of development also.
Okay, right. Thank you.
Thank you. The next question is from the line of Parshva Veer from Gorilla PMS. Please go ahead.
Hi again. Are you planning to work outside Bombay also?
No, our focus has been MMR. We are exploring all the proposals that are coming from Bangalore and Pune, but our focus has always been MMR. So right now we are concentrating on MMR.
Okay, sir. Thank you.
Thank you. The next question is from the line of Viral Shah, an individual investor. Please go ahead.
Good afternoon. My question is related to the other income section, which has been shown in the financials. It has grown quite high as compared to the earlier quarters. Please, can you elaborate on the same?
Yeah, sure. See, the other income of about 50 crore consists of one major item, which is capital gain on sale of investment of 40 crore. These are, the premises that we had built in Marathon FutureX and kept for investment, meaning we had rented them out. And those are the premises that we sold during this quarter, realizing about 40 crore from that. So that's why there is a spike in other income. Although this 40 crore is other income, it is actually something that we had constructed 3 years ago.
Okay, so in a way, it is a good income for the company.
Yes.
That we are liquidating.
Yeah. See, if you see, 5 years ago, we were selling in FutureX about 25,000 rupees a square feet. And that is the time when we rented some of the premises. And currently now when we are selling, it is 50,000 rupees per square feet. So there are two things that has happened. One, we have been able to leverage our ability to hold on to these assets by leasing them, and secondly, selling them at a appropriate time, which is when the market is right.
Okay. And just one more question. What would be the equity post-merger? Would it be fully diluted?
6.75 crore. Post-merger, it will be about 11.85. See, currently, before QIP, it was 5.13. Then after QIP, it is 6.75, 6.75 roughly. And post-merger, it would be about 11.8 or 11.9 crore.
Okay. Okay, great. Thank you so much.
You're welcome.
Thank you. Participants, if you wish to ask a question, please press star and 1 to ask a question. The next question is from the line of Jignesh, an individual investor. Please go ahead.
Yeah. So, sir, post-merger, your equity will be 11.9 crores. So,
company equity, not company's equity, total equity.
Yeah, total equity. So, currently, after QIP, your holding is 55%. So, post-merger, what would be the promoter holding?
Close to 75%. It will be 74.3% or so.
Okay. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference to management for closing comments.
Thank you very much for participating. Just one clarification. When I mentioned total equity, I was mentioning number of shares. Each share is about 5 rupees paid up capital. So when I'm saying 11.8, it is 11.8 crore shares into 5 rupees. That would be the equity capital. Yeah, thank you very much for all participating, and let's hope to see you soon and with much better results.
Thank you. On behalf of Marathon Nextgen Realty Limited concludes this conference. Thank you for joining us, and you may now disconnect your line.